Good morning, hello and welcome to Money Control's live stream. You're tuned into a fresh new edition of Opening Bell with me, Lovisha Darad. Well, we are into the fresh week, and now that the big boy Reliance Industries has reported record quarterly profits for the first quarter, it sets a good tone for the India Inc. Apart from that, we did see over the weekend ICICI Bank reporting a stable Q1 and HDFC Bank also reporting a growth in its quarterly profit. But yes, the early reaction of the brokerages are largely positive on these counters, so we'll watch out for these stocks in today's trading session and whether or not they can help Nifty steer back into the green after the lull we saw in the last 2 days of the last week. But yes, first rates first. GIFT Nifty for now is indicating a muted start for the markets. Pre-open rates are also indicated a muted open at this point of time. However, if you look at the global cues, that remain quite mixed. US President Donald Trump has reiterated August 1st once again as the tariff deadline, and yet again we don't really have a deal as of now with the US. So any updates on the same can act as a kicker for the markets going ahead. But from the rates perspective, US markets were solid last week, given that the earnings have been in line with the expectations. More earnings will be this week. Meta and Alphabet, all of these companies will be reporting their quarterly results. But yes, Asia Pacific markets, they were also mixed this morning. We did see China keeping its benchmark lending rate steady. So as a result, quite a mixed cues that is coming in from the Asian markets too. But back home, we'll watch out for more earnings reaction and more earnings this week as well. So we'll take up your stock related queries as well. So keep posting them on our live feed and we'll take them up before 9:30 a.m. Now let's quickly take a look at the top headlines this hour. Stocks on Wall Street end Friday's session mixed as traders assessed tariff threats. Dow loses over 100 points and Asia Pacific markets open mixed as China keeps lending rates steady. Meanwhile, GIFT Nifty is indicating a quiet start for Indian markets. Crude oil prices hold steady as mixed US economic news offset new EU sanctions on Russia. Brent trades around $69 per barrel, whereas gold gains on the back of a weaker US dollar. Reliance reports record quarterly profits thanks to one-time gain of 8,900 crore rupees stake sale from Asian Paints. Even adjusting for this gain, profits was up 20%. Rapid store expansion helps retail revenue rise 11%. Mukesh Ambani reiterates the group size will double in every 4 to 5 years. HDFC Bank net profit grows 12% year-on-year while asset quality saw some weakness. Meanwhile, ICICI Bank continued to exhibit strength as net interest income beats estimates while asset quality remains stable. And the monsoon session of the Parliament is set to begin today. Prime Minister Narendra Modi will address media ahead of the House proceedings. Trump tariffs, the Air India plane crash and Operation Sindoor will be top of the agenda. 15 bills are also likely to be on the table throughout the session. All right, if you look at the last trading session, we did see that the Nifty has fallen over 100 points and it did extend the loss for the second consecutive day. If you look at the Bank Nifty levels, that also slipped for the second consecutive day. And today we'll watch out how ICICI Bank and HDFC Bank, both the heavyweights, will react and it could steer back Bank Nifty once again into the positive terrain. Wipro, Bajaj Finance, they were the top Nifty performers in the last session. Axis Bank, Shriram Finance were some of the top Nifty laggards. On the other hand, if you look at the broader end of the markets, they continue to see profit booking in the last session. Basically, mid-cap and small-cap indices lost the 3-day gains it had made and it was down 1% lower in the last session. On the sectoral perspective, Nifty Media, Nifty Metal and IT indices that ended in the green in the last session, and private bank and consumer durables, they were the top laggards. But like I was mentioning, earnings reaction, Reliance Industries, HDFC Bank and ICICI Bank will see some reaction today, and flowing throughout the week, Infosys, Ultratech, Cement, some of these companies will also be reporting their quarterly results. Coming to the fund flows data, FIs, they stood as net buyers of the stocks because they bought stocks which was worth about 375 crore rupees in the cash markets. On the other hand, DIIs that bought a larger quantum of about 2,000 crore rupees in the cash markets. If you look at the option queues data, Nifty put call ratio slips to about 0.78 from 0.94 levels in the previous session. And among the F&O ban list, Bandhan Bank has been added ahead of its Q1 results. On the other hand, the stocks that continue to be a part of it, that includes the likes of Angel One, Hindustan Copper and RBL Bank. Now, just a couple of minutes before we go to the open, right now the pre-open rates are indicating a subdued start. However, Sensex is up about 200 points and Nifty is also above that. It's testing that 25,000 levels in the pre-open at this point of time. So we're hoping for a good start for the markets, but let's see how it happens. But on that note, let's quickly get on board with the technical expert of the show. Joining me is Ruchit Jain of Motilal Oswal. Ruchit, last session Nifty ended second day lower, nearly to about its 1 month low. How do you look at Nifty and the setup this week?
Yeah, hi, very good morning, Darsha. Well, I think what we have seen in last 15-20 days has been more of a time-wise correction in the benchmark indices within an uptrend. Nifty has consolidated within very range and we have ended right around the immediate support, which is at 25,000 to 24,900. Now, the broader markets have started some signs of a relative underperformance. What we have seen that Nifty Mid Cap 100 Index has been unable to surpass that 60,000 mark in after about three attempts in last 15 days. And even the Nifty Small Cap Index although has shown a good relative outperformance so far, but that has been a negative divergence on the small cap indices as well. So this clearly indicates that we are likely to continue this time-wise corrective phase in the near term at least. So 24,900 is the immediate support which we are watching out on the Nifty as well. In case if the 24,900 breaks, then we could see some more correction on the index funds towards 24,650. So as of now, it seems that we would continue to consolidate with more of a sector specific or stock specific momentum coming in on both the sides, but not expecting any run up move on the either side of the indices as of now.
Okay. No, nothing run up as of now. Ruchit, what about the Bank Nifty index? Now we have ICICI Bank, HDFC Bank reporting its results. We even saw Axis Bank reporting results last week. How do you see now Bank Nifty to move?
So I think it's better to take more of a stock specific approach, within the banking space as well. 56,000 on the index front is a very important support where the 50-day exponential moving average is placed. Till that is intact, the broader trend for the Bank Nifty index remains positive. But stocks such as Axis Bank, which have shown a relative underperformer, I think that underperformance could continue for a while. While other names such as ICICI Bank is there, or even SBI, within the PSU banking space looks positive. So we can see some positive momentum there too. So there would be some stocks, which would underperform and some stocks which would see some positive bias. So 56,000 would remain an important support for the Bank Nifty index. While taking a stock specific approach within the sector, I think should be a better strategy to play this move.
Okay. All right, let's talk about today with the first stock of the day, that is your Reliance Industries, because the company did start the year with an all-round performance. Now, the company has reported highest ever consolidated quarterly EBITDA and net profit during the quarter, and it was backed by good momentum coming in from the telecom and retail businesses as well. If you look at from the figures perspective, consolidated net profit jumped about 76% on a year-on-year, and there was one-time gains of the Asian Paint stake sale. But excluding the proceeds from the sale of the investment also, the profit grew about 25% on a year-on-year basis. If you look at from the top line front, revenue up about 6% Y-on-Y with double-digit growth which was seen in Jio platforms and Reliance Retail also. How the brokerages have reacted to it? They're quite positive. HSBC have shared a buy call. Jefferies have also shared a buy rating as they project profit to rise, EBITDA to rise about 11% growth in FY26. Ruchit, so far this year, the stock has done well. Q1 performance has also been quite impressive. How does the stock look like going from here on?
I think the stock has already seen an up move before the numbers itself. You look at last one quarter where the stock bottomed around 1100, 1130. From there, we have already seen a rally towards 1550 in a period of 2.5 to 3 months. So clearly, some sort of up move has already been priced in before the numbers itself. In the short term, there could be some consolation, but yes, the longer term trend for the stock remains positive. As we do not see any significant price wise corrections coming in the stock going ahead. So I think Reliance would be more of a pick where if one is looking from a mid to long term perspective rather than taking any kind of short term trading bet in the stock. But if in case if we get any kind of minor dips today or in the near future, take it as a buying opportunity for a bit mid to long term. I think keeping a horizon of at least 6 months could make more sense to go long on Reliance Industries.
Okay, all right. Positive on Reliance Industries. What about how does the metal index look like, Ruchit? Because it was one of the top sectoral gainers last week, and now that we have China also keeping the lending rate steady, how does the metal index look like for this week?
So yes, there have been signs of positive outperformance within the metal space. Even in Friday's trading
Hmm.
session, we saw when the overall markets were not doing that good, but no, metal was the only index which relatively showed strength and ended on a positive note. So I think steel stocks, especially stocks such as JSW Steel is there, SAIL Steel Authority is there. They have very positive structure, so they can continue to continue the move. Even NMDC within the space and is one stock where the risk reward ratio is favorable post the recent correction. So on Friday also we witnessed a breakout supported by very good volumes in NMDC as well. So metals relatively looks better. NMDC if one has to go long can create fresh longs over here with stop loss below 68 rupees, expecting near term target somewhere around 77.
Targets around 77. All right, let's take a look at HDFC Bank also because that also reported its Q1 results over the weekend. We did see the NII rising about 5.4% on a year-on-year basis and the profit increased by about 6% on a year-on-year basis. Now, let's see how the brokerages have reacted to it. If you look at Nuvama, they have shared a buy call on the counter and have shared a target price of about 2270 rupees per share. What they believe is that despite the margin contraction, the core NIM was also down about 11 basis points. And however, the asset quality that remains best in class despite the slippages that was risen because of the farm loans going ahead in the quarter. How does the stock look like, Ruchit? Because in the past 1 month, the stock has been stuck in a range at this point.
Is this entire sideways move just seems to be a consolidation phase within an uptrend. 1950, 1940, where the 50-day exponential moving average is placed, is an important support for the stock. Till that is intact, it seems that price-wise downside should be limited, but there could be some phase of more time-wise correction in the short term.
Time-wise correction could be possible in the short form for HDFC Bank. But let's see the first rates, which is coming on your screen. Nifty is opened in the green, 0.2% gains above that 25,000 mark. Back again, we are once again. If you look at Sensex, that is also up about 160 points at this point of time. So yes, we have opened in the positive territory despite the mixed global cues that we did see overnight. On the other hand, if you look at some of the sectoral gainers and movers, India Wix, however, it's showing some signs of volatility, up about 3% at this point of time. Nifty Metal Index, like we were talking about, extending its gain to this day too, with about 0.5% gains coming in. Of course, China has kept its lending rates, so we can say, a little bit of a movement that is coming in from the metal stocks perspective too. On the other hand, Bank Nifty Index, once again, it has opened in the green with about 0.4% gains at this point. If you look at some of the sectoral losers, however, Nifty IT Index once again with about 0.1% cut. Nifty Oil and Gas seeing a sharper cut of about 1% or so. Nifty Realty Index also dipped in the negative territory. Let's take a look at the mid cap and small cap indices. Both of them, however, have been trading with a negative bias. Mid cap index with about 0.3% cut. Small caps also with about 0.2% cut. So yes, broader end of the markets does not seem to be faring well. But we did start off, with a positive, positive note. However, if you look at the headline indices, they've trimmed some of its gains. Sensex is now trading flat in the green, and Nifty is also it has slipped below that 25,000 mark. So you can see volatile swings, which is quite intermittent in the markets. But yes, coming to the top gainers and losers on the Nifty 50, HDFC Bank soaring in the trade with about 1.6% gains. ICICI Bank also doing well on the back of its June quarter performance with about 1.5% gains. So both of the private lenders have been dominating the Nifty 50 gainers list. On the other hand, if you look at the top loser, Reliance Industries not doing well. We're seeing a cut of about 2% or so. Ruchit was talking about, how plenty of things, positives have been priced in the counter as well. So we could see some, downplay in today's reaction. On the other hand, if you look at Hindalco, one of the top gainers, once again, Hindalco, Tata Steel, all of the metal stocks doing well in today's trading session. Ultratech Cement also ahead of its first quarter performance. It will be unveiling its June quarter results later today. Ahead of its Q4 results, Q1 results, 0.4% gains. On the other hand, IndusInd Bank once again not doing well with about 2% cut coming in for IndusInd Bank. Axis Bank, on the back of its Q1 results, of course, extending its loss to about this day. 1% cut coming in for Axis Bank. Titan, Adani Ports also seem to be one of the top losers on the Nifty 50. But yes, ICICI Bank, top gainer on the Nifty 50. We did see that the company report a stable June quarter performance once again, with about net interest income rising about 11% on a year-on-year basis, and net profit was also up about 15.4% on a year-on-year basis. How the brokerages have been reacting to it? Nomura has shared a buy call on the counter, and they have raised the target price to about 1740 rupees per share, because they believe it was a strong all-round performance for the lender once again. On the other hand, Nuvama has also shared a buy call on the counter, and they believe that there was a strong liability management for the counter. However, Goldman Sachs have shared a neutral call, and they believe that it was a well-managed quarter, but the slowdown in loan growth and fading recovery tailwinds may cap re-rating in the stock. If you look at from the stock, from Ruchit, how does the stock look like? Because from May onwards, it has been stuck in a range 1450 to 1400. However, today the stock seems to be doing well.
Well, Risha, overall trends look for ICICI Bank looks quite positive, within the private sector banking space. We have seen that whenever there are corrective phases in the banking, ICICI Bank usually tends to show relative outperformance, and the stock has a good support base around this 1400, 1318 range, which has not been breached since some time. So the downside seems to be very limited. I think the stock should see a gradual up move towards its previous highs again. So definitely one can trade with a positive bias in ICICI Bank.
Okay, positive bias on the ICICI Bank. Let's take a look at some of the viewer queries dropping on our live feed. The first query coming in from Naveen is asking the view on Shriram Finance for positional trading. Any thoughts on the counter? Because so far this year the stock has been on an uptrend, but right now from the past 1 month the stock has been quite flat.
And the stock seems to be in some corrective phase, and in the short term, we could see some more correction, and the prices have immediately breached its immediate support on Friday of 660. And next major support is coming around its 200 DMA, which is at 620. So I would tend to avoid any kind of bottom pushing at current levels. The stock could see correction towards 620 levels. In case if we get those levels, then one can take a review again over there.
Okay, all right. Once again, a review over there we can see for the counter. Let's take another viewer query on that note. Debuke is asking the view on Marico. Past 1 month, Marico has outperformed the benchmark with about 3% gains or so. And so far this year also, it has delivered decent returns. Ruchit, what do you see? Can we expect the rally to sustain?
If one is looking more from a positional perspective, then one can expect a decent up move in Marico. We have seen that the entire FMCG space, where last 6-7 months the index, or the most of the stocks within the FMCG space have not performed well. This stock is one of the stock which is trading around its 52-week highs. So a clear relative outperformance within the sector has been seen when other stocks have consolidated. Now, whenever the Nifty FMCG space resume its positive momentum going ahead, I think Marico would see a continuation of the uptrend based on this recent outperformance. So for the short term, maybe we would see some consolidation in the range of 690, 700, which would act as a support, and 750, which would act as a resistance. But once we see a breakout from this range, then we should expect a good momentum on the positive side in Marico.
Okay, 750 is the resistance that we need to watch out for Marico then. Let's take another viewer query. Satya is asking the view on Mahanagar Gas for the medium-term perspective. What do you think, Ruchit? Past 1 month has been quite good for the counter, 8% gains coming in.
So I think we have seen some sort of volatility in the stock over last 1.5 months. But 1440, 1450 has been a good support for the stock, which was earlier acting as a resistance. The downside seems to be limited. You can buy some quantity at current levels with some room that in case if we get dipped towards that support of 1450, you should look to add more over there. So overall looks positive. Have some positional perspective, and you can go along with limited quantity at current levels and room to add more on dips.
Okay, all right. 1450, that is where we need to add on for the counter. Let's take another viewer query then. Komal Makhija, she's asking the view on Kalyan Jewellers for the next 6 months. She's asking what are the possible target and the stop loss for the counter. If you look at from a 1 month perspective, Kalyan Jewellers has done quite well despite the muted market sentiment. And so far this year also it has gained quite well. But for the medium term perspective, anything that on a target and resistance levels that you want to point out, Ruchit?
So Kalyan Jewellers of late has not we have not seen any kind of good price-based volume action, volume-based price action coming in the stock. On the downside, 540, 550 is the support range for the stock, but it does not seem that we would see any kind of significant up move going ahead, at least in the short term. So I think it's
Okay.
no more of a consolidation phase which can continue in the stock. The risk reward ratio would become favorable only if we get dip up towards that 550, 540 range.
Okay, all right. Consolidation could prevail for Kalyan Jewellers for some time then. Let's take another stock at this point, JSW Steel, because that company delivered its first quarter performance. We did see that the net profit has jumped sharply by about 155% year on year in first quarter, and the bottom line performance, what aided was the lower coking coal prices and of course the softer input costs. On the other hand, revenue rose marginally in the first quarter. After July top, the stock is down 2% from there. Ruchit, what do you think the near term holds for JSW Steel?
So it's been more on a sideways trend since last 2 months. On the high side, 1060, 1070 has acted as a resistance not only recently, but also in the month of March. If you look at the March month high was around 1070, and in this month, July also, the high was somewhere around 1060. So the stock is not able to surpass that hurdle of 1060, 1070. And only when the stock managed to give a breakout above this, then we would see a direction move. Today also post the numbers, we are not witnessing any no such kind of no follow-up move on the positive side as of now. So one can keep a wait and watch approach in the stock. Wait for a breakout about 1070, then one can take a fresh no outlook to create fresh longs over there.
Okay, all right. That's the view from JSW Steel. We also have a viewer query on Tata Steel by Arpana Kar. She's asking what are the views on the counter. Tata Steel from past 3 days, Ruchit, the stock has been doing quite well. It's up about 5% or so. What does the near term indicate?
Yes, Tata Steel relatively looks no better. We have seen that the stock has formed a gradual high top, high bottom structure and is still in an uptrend. So I think here the price-wise downside seems to be limited over here. And one can trade with a positive bias, and in case any existing long positions are there, one can expect levels around 172 in the short term.
Okay, 172 levels in the short term for Tata Steel. Let's take another viewer query on that note. Raksha is asking the view on Kotak Mahindra Bank. Kotak Mahindra Bank, how does the stock look like, Ruchit? Because from the past 1 month perspective, the stock has entered a consolidation zone.
Yes, I know overall short-term trend seems sideways, but longer-term trend seems positive. So buy and dip approach can be kept in the stock. Any dip towards 2050, 2080, if we get it going ahead, that should be used as a buying opportunity.
Okay, all right. Let's take one stock in focus, Ultratech Cement, because the stock has been doing well ahead of its Q1 numbers. According to Money Control poll estimates, revenue is expected to rise about 19% from a year-on-year perspective, and net profit is expected to grow in double digits too, with about 14% on a year-on-year perspective. Margins are expected to also expand on soft input cost in the June quarter. If you look at from a stock gain perspective, Ruchit, the stock is on an upward trajectory from June lows. Can we expect an extension of the same?
It's quite possible because the cement, firstly, sector as a whole has relatively done well in last 15, 20 days when the markets have gone through some consolidation phase. And Ultratech Cement also see, it has recently given a breakout after about 1 years of consolidation phase, where 12,300, 12,200 was earlier there acting as a resistance. And now, that should become a support for the level until this is intact. We can expect higher levels first around 12,700 in the short term, followed by 13,200 levels over a period of time. So overall trend looks positive for Ultratech Cement. We can expect one can hold any existing long positions for positional targets around 13,200.
13,200 for Ultratech Cement. That is the view coming in. Let's take another viewer query on that note. Alex is asking the view on Z Entertainment, and he's asking if there is any emerging trend on the chart, because if you look at from a 3 days perspective, the stock has been on a sliding trend. Ruchit, any thoughts on the counter?
Nothing much. It's just that recently we have seen some days where the price volume action has been strong. And on the low side, 130, 120 now positionally is a good support base for the stock that is 200 EMA is placed. And so any existing long positions are there that the stock is coming around 128, but for fresh positions, the risk reward issue is not that favorable. So hold existing long positions, not advisable to create fresh ones.
Okay, hold existing long positions for the counter for Z Entertainment too. That is the view coming in. Let's take another viewer query. Bharat is asking on Irida how the stock is expected to do. Like, if you look at from a 1 month perspective, the stock is down, and from a year-to-date perspective, also the stock has been on a sliding negative trend. Do you expect this trend to continue, Ruchit, for Irida?
Near-term trend looks weak only. We have seen a lot of low bottom structure coming in the stock. Even in the phase of April to June, when the broader markets have done quite well, we had also seen certain PSU stocks showing good momentum, but there was no participation from the IREDA as such. So clear relative underperformance, and as of now, no signs of reversals so far. So we can see no continuation of this down move in the near term.
Okay, all right. Weak near-term charts. That is what Irida can sustain at this point. Let's take another viewer query. Satya is asking the view on India Glycols for a fresh entry. India Glycols, the stock has been on an upward trajectory from May lows. The stock is up about 30% or so. Ruchit, where do you expect the stock to go in the near term?
Very difficult to give what would happen from here on, because already we have seen a good price-wise no move coming in the stock in last few months. But no, not advisable to buy fresh since the rally has already, I think, been done. But yes, any existing long positions are there, then 1770 is the immediate support for the stock. Then one can hold the existing longs with the stop loss below 1770 levels.
Okay, 1770 levels. Let's talk about IndusInd Bank, because it is one of the top Nifty losers. To a 3% cut that is coming in for IndusInd Bank. And if you look at from a 6 months perspective, 12% down, that is where the counter is. How does the near term look like? Does the pressure seems to persist going from here on, Ruchit?
So it has been an underperformer if you look at IndusInd Bank and compare it with other private sector names. So I think if one has to go for private sector names, then better to go with outperforming names such as ICICI Bank, which we just discussed. So IndusInd Bank, yes, for now the trend still remains on the bit sideways to negative. 900 is the immediate resistance for the stock, and until we see a good price volume action coming in the stock going ahead, I think this relative underperformance could continue for IndusInd. So better to prefer ICICI Bank within a private banking space over IndusInd Bank.
Okay, all right. Let's talk about another banking stock, that is your Bandhan Bank, because that also reported its June quarter performance, where the net profit was up by about where the net profit was, however, saw a decline of about 67% on a year-on-year basis. However, on a sequential basis, net profit improved by about 17% or so. On the other hand, if you look at from an NII perspective, it marked a 10% decline from a year-on-year perspective too. If how the brokerages have been, however, reacting to it, Jefferies have shared a buy call on the counter, and they have raised the target price. They believe that the Q1 profit slightly remains above the estimates with better NII, and they find the valuations reasonable, and any turnaround in MFI cycle could benefit the counter going ahead. Macquarie has also shared an outperform call, while CLSA has given out a high conviction outperform call on the counter. Bandhan Bank, today the stock is down with about 2% cut. Ruchit, how does the stock look like in the near term?
It was a huge underperformer till the month of March, but post that, since month of April, we have seen a gradual high top, high bottom structure coming in the stock, which indicates that the price wise, I think no downside could be limited, and the worst phase for the stock seems to be behind. But yes, I expect some slow and gradual up move in the stock with 165, 170 range acting as a support going ahead. And if that remains intact and we see any kind of dip coming in the near future towards 165, 170, then that should be used as a buying opportunity for Bandhan Bank.
Okay, all right. Let's take another query at this point. Voice is asking the view on Hindustan Copper. Is asking what would be the performance for the next few months. If you look at past 2 to 3 days, the stock has been doing well. It's gained about 3 to 4%. Of course, the entire metal basket has been doing well. But Ruchit, anything that on the individual level that you can watch out for Hindustan Copper?
Can be a slow mover. 250 to 55 is a support range for now. Till that is intact, one can expect some up move again towards 285 to 290. But no, within the metal space, if we see, then we just spoke about that steel names such as SAIL is there, or Tata Steel is there, or even NMDC. Within the broader metal space, we discussed that the overall structure looks positive. So any existing positions, if there are that in copper, then one can hold with stop loss value 250. But for fresh buying, is if anyone is looking, then I think NMDC can be referred.
Okay, NMDC also we can look at. Since we talked about Ultratech Cement, let's also talk about JK Cement because that also reported its June quarter performance. We did see that the consolidated net profit has risen about by 75% or so, and sales were also up by about 20% on a year-on-year perspective. What the brokerages have reacted, Jefferies have shared a buy call on the counter, and they believe that the grey cement volume has grown about by 15% on a year-on-year perspective, and capacity has also expanded to about 25.26 metric per ton. From a counter perspective, how does the JK Cement look like, Ruchit?
The stock is already in an uptrend. We have seen last 5 or 6 months, the stock has consistently shown an up move with high top, high bottom structure, and there are no signs of reversal as of now. So I think overall, as we discussed earlier as well, that the outlook on the cement as a sector is positive, and within which JK Cement has participated quite well over last few months. So that outperformance or that uptrend could continue going ahead as well.
Okay, all right. All right, just one last question before we let you go, Ruchit. Any of the topics that you want to highlight in this market? We have some Q1 earnings which is floating through, but anything that you want to point out?
So I think couple of names which have not yet performed in this market rally over last few months that can do well going ahead. One is State Bank of India (SBI), where we have seen a good amount of consolidation over last 5 6 months, but the stock has formed a good support base around 800 805 kind of range. So the downside seems to be limited from here on, keeping a stop loss below 790 796. Traders can go long on SBI for potential up move towards 860 to 870 kind of range.
Okay, all right. Those are the stocks that we need to watch out for. But with that, we have to let you go, Ruchit. Thank you so much for your time.
Thank you, Lakshmi.
All right, let's take a quick check of the markets before we move on to our next guest of the show. If you look at from a Sensex and Nifty perspective, we did start in the green, but we are back in the red. Nifty is down about 82 points and below that 25,000 mark, and Sensex is also down about 200 points at this point. If you look at from the sectoral perspective, Bank Nifty seems to be doing well, but however, it has also trimmed some of its gains from where we started, and it is trading flat with a positive bias. On the other hand, Nifty Metal Index continues to hold up well with about 0.5% gains, and on the other hand, majority of the sectors have slipped into the negative territory, even for the Nifty private banks as well. Nifty IT Index continues to extend losses, and if you look at Nifty Oil and Gas Index, that is also down about 1% or so. On the other hand, if you look at the broader end of the markets, they have been lackluster since the morning, and small cap and mid cap indices, both of them exhibiting negative trends with about 0.3 to 0.5% cuts. But yes, let's move on to our next guest of the show. We have Mahesh Patil, Chief Investment Officer of Aditya Birla Sun Life AMC, joining us. Mahesh, we are into the third week of earnings season. What is your initial reaction now that IT results and some of the banks have also reported their first quarter performance?
Yeah, good morning. So I think the results again this quarter, again, expectation was fairly low, right? And I think up till now, what we've seen is been a kind of a mixed, I would say. But by and large, I think doesn't seem that you will see. I mean, compared to what we saw in the last 2 3 quarters, where post the results there was a big downgrade to the earnings for the subsequent year. I don't think. I think we should see any big downgrade to earnings for FY26. Overall, I think this quarter is expected to be muted. We are expecting a growth for this. If you look at the Nifty, for example, the earnings growth would be somewhere in the mid-single digit or high single digits in that range. Primarily driven by sectors like oil and gas, for example, okay, which because of a lower base last year should report a very good number. Sectors like cement, again, because of a low base of last year, should report very strong numbers in this quarter. But most of the sectors, okay, with this kind of a middling, primarily because the fact that the overall top line growth, okay, is not that great. We've seen that the nominal GDP growth for the quarter is in around 9% or so. So I think that will probably weigh down on the earnings. But I would say that overall, the numbers up till now which have come in, we're not seeing any meaningful downgrades to earnings.
No meaningful downgrades to earnings from here on. How are you finding the mid-cap IT space now that the large caps have complained about sluggish discretionary spending, and there is some tariff noise disturbing deal closures too? Do you believe mid-cap IT firms could actually outshine the large caps once again?
So the IT sector overall macro trend growth is still a bit sluggish. We are not seeing any major pickup over there in terms of the overall growth rate over there, though there are some green shoots coming in from the BFSI sector. So I think the overall IT sector growth for the larger peers would be somewhere around 4 to 5% top line. But company specific, yeah, there could be in the mid cap space where the growth outlook could be better. And I think it will be more bottom up in the mid cap space. And some of the in fact, the mid cap IT sector is at a premium to some of the large cap IT names, and that's primarily because of the growth differential, where in the mid cap IT, some of these they are growing at say high single digits or even in the low teens. And I think as long as they're able to sustain that growth, I think they might continue to do well. So I think IT will, by and large, become more bottom-up, company-specific story in the in the mid-cap space, okay, which can outperform. Otherwise, the sector would be fairly muted growth for this fiscal year.
Okay. Do you believe that investors can use IT sector as a contra play going from here on?
Possibly, I think if the market goes down, if there is a fear that the markets corrects from here, then I think IT sector could outperform because it's been a kind of a laggard now for some time. The ownership levels in the IT sector are also probably people are underweight in that sector. And I think we're not seeing any major variation to the earnings. I think most of the negatives there are already discounted. So that to that extent, yeah, it can be a contra play. Again, if you look at the large IT companies, their dividend yield now are somewhere around 3 to 5% in that range. So that also provides some kind of a margin of safety and downside support over there. So yeah, so I think in a weaker market, probably IT sector can be a good defensive and outperform.
Okay, all right. Good defensive at this point of time for IT. Mahesh, how are you finding the entire banking pack now that we have some heavyweights which have reported the June quarter results, and majority of them have said that the full effect of the rate cuts are yet to be visible on the second quarter margin performance. So, do you believe that banking sector is a good place to approach, or do you believe it's a hold at this point?
So banking overall, I think the earnings for this year and this next coming quarters might not be that great because of, as you rightly said, the NIM compression because of the rate cuts which is there. But I think overall, I think the sector will only see a big meaningful upturn if you see the credit growth picking up, because credit growth is still a bit sluggish. And so earlier it was the deposit growth which was a challenge. I think with the now abundant liquidity which the RBI has provided, I think deposit growth is now is not such a big challenge, and we are seeing even faster rate cuts on the deposit side also, which is likely to help the banks to recoup the margins, okay, because of the rate cuts. What you will see, and also the CRR cut will also start to contribute from the second half onwards. So I think all in all, I think banking sector should start to do better, okay, as we progress into this fiscal year, and next year again one should see a decent growth for the leading banks. But again, here we've seen some kind of a divergence there in terms of asset quality. A few banks are still showing, I mean, the recovery from the poor asset quality has been slightly slower over there. So again, it will probably be depending on at least in this year, when we are seeing not a big tailwind for the banking sector. It will be again stock specific, and more so, I think banks which are able to do better on asset quality and possibly do slightly better on growth, I think they will do better. Overall, I think we are by and large positive on the banking and financial services sector.
Okay, okay. How do you see the entire, Nifty's upside? Because everyone has been chasing for the all-time highs, but now that we talked about IT and of course banking also, we are, hoping for recovery from the second half onwards itself. So how do we see, because these two are the major constituents of Nifty. So how do we see Nifty's trajectory from here on? Do we expect that because we are seeing a little bit of a lackluster performance from both of these, heavyweight constituents, the upside could be limited from here on?
So I think you're right. I think the two large sectors are not likely to, at least this year, see a big uptick in terms of the earnings growth over there. Also, consumption, okay, which is also been weak, okay, for the last whatever 12 to 15 months. That is also probably there are some green shoots over there. Rural economy, okay, is could possibly pick up with good monsoons coming in, with also with real wages now getting into positive territory. And urban consumption, also the impact of the rate cuts, what we have seen, and the tax cuts in the budget should start to trickle through, so which might possibly come in after the festive season in the second half. So I think until then, I think for the next quarter or so, I think the markets could remain range bound because there are not any immediate triggers from the earnings side, and valuations are like fairly reasonable. If you look at the Nifty, it is trading slightly above its long-term average. And also the fact that we see a good amount of supply also coming in, supply of paper, which has been hitting the market in the last couple of months, either through IPOs or QIPs or private equity players kind of trying to monetize. And that is likely to cap the upside, at least in a near-term perspective. So I think, yeah, market might remain in a kind of a flattish zone in a narrow band before, I think, in the second half, if there is a pickup in the consumption and other sectors start to look up, I think then that's where the market could again start to now make an upward journey and possibly breach the earlier highs.
All right, consumption theme, that is where we are betting on right now. Mahesh, if you look at last 4 months, the FIs have been net buyers for the Indian markets. But so far this month, they have been net sellers, 16,000 crore rupees. That's where the outflows have been. That's where the figure stands at this point. What is keeping them away? Is it the valuations, earnings momentum, tariffs, or what do you believe?
So I think the money flow, what we saw a couple of months back, was on the back of flows into the emerging markets because of the dollar weakness, what we had seen. Right now, the DXY is again stabilized a bit and starting to move up. And that's the reason why we're seeing some kind of tepid flows into emerging markets and also in India. And also the fact that within other markets, India is relatively expensive, is what global investors feel. I think other markets which had corrected significantly in the last few years, where the valuations are relatively better. So in that context, I think in a short-term perspective, I think there is always relative allocation between India and the other emerging markets, especially China. But I think overall, medium to long term, I think India would still remain a relatively better growth market, and I think that will continue to attract foreign flows over here. But I think in the near term, I think weakness is primarily because of the slightly dollar stabilizing the XY, and the fact that, yeah, I mean, relative valuations after the run up is Indian markets are looking slightly. And again, mind you, the growth differential also between India, at least in the last 1 year, if you've seen, earnings growth has been in the mid single digits, right, which is been lower than some of the other markets. Though I think over a medium term, over the next couple of years, we expect the growth to move up into say low teens, 10 to 12% in that range. So I think until then, I think you might see FIs probably be slightly lukewarm into India.
Okay. Mahesh, we did discuss about banks, IT, and of course you mentioned about consumption and the cement pack also. Anything else that you're watching out from a sectoral perspective that you're overweight on?
So I think, again, to some extent, as I mentioned, consumption is where we think that there could be some recovery, more so discretionary consumption, because that has both urban as well as rural consumption was impacted in the last 1 year. And we are seeing signs of that. At least there are reasons to believe that you could see that improving. And that is, again, structurally, I think, discretionary consumption. is likely to do well in India, where demographics are in favor, where premiumization is happening, and also some move from unorganized to organized is likely to still play out over there. So that's an sector where, especially in the retail sector, consumer durables, these are some of the areas, even building materials, which is been an underperformer. And with the real estate sector doing well with new house construction, getting now built out and ready, I think that's an area where you would see some pickup in the coming quarters.
Okay, okay. Now that you also mentioned about the places that you're bullish on, anything that you're underweight, something that where you find the growth is still elusive?
So underweight would be a few sectors like which are slightly linked to the global growth. For example, metals, I would say. Even FMCG, we are still underweight because the growth has still been underwhelming over there, and valuations are still on the higher side. So that's a sector where we are still underweight. Oil and gas also is a sector more because there are not any major triggers in the oil and gas sector, while the oil marketing companies will see very strong numbers coming through, but rest of the oil pack will be lackluster. So, yeah, so these are the sectors by and large where we are underweight.
Okay, okay, all right. All right, with that we have to let you go, Mahesh, but thank you so much for your time and we hope that we connect with you soon.
Okay, thank you.
All right, let's take a quick check of the markets right now, how it is moving, because it did slip below that 25,000 mark and it has once again recovered and it's testing that 25,000 mark from a Nifty perspective. On the other hand, if you look at Sensex, that is also up about 100 points. So yes, quite a volatile swing that we are seeing in the markets at this point of time. Once again, if you look at from the Sensex and Nifty perspective, both of them have been trading flat with a negative bias. So yes, volatile swings that continues to remain quite prominent in the markets today. On the other hand, if you look at some of the sectoral gainers, Bank Nifty continues to do well. Nifty Metal Index also holding up well. On the other hand, if you look at Nifty IT, Nifty Realty, they are some of the top laggards, and of course Nifty Auto Index as well. And the broader markets, they continue to remain quite depressed, and with mid cap and small cap indices, both of them seeing a cut of about 0.2%. But we'll watch out how the recovery takes place in the second half of today's session. We'll hope for that as well. But now, for now, we have come to an end of this edition of Opening Bell. Don't forget to tune in at 3:30 for closing, and we will be discussing about how the market is developed and what the stocks are in focus. Until then, signing off.